Hi and welcome to the Market Alert for Friday the 20th of January 2023. So gold jumps, Dow dumps and year-to-date gains as hard landing and debt ceiling fears surge apparently. So USA sovereign credit risk is soaring back near record highs. Amazing how the sentiment can soon change. Stocks and bonds hit after Hawkish ECB speak and US hot data. Now, interestingly enough, I mentioned this last week that the data kept coming out all of last week, PPI and all of the others, that the data was still running hot and inflationary and the market continued higher. It's amazing how the narrative changes when they need it to. US stocks declined amid headwinds from hawkish ECB rhetoric and firmer US data. There we go. News today. What have we got? Retail sales. They're out for the UK at 7 a.m. They're forecast to be better than forecast. It would be because it's going to be the December Christmas numbers, so that will boost the market. The WEF are still deciding our futures, fifth day of that. And Lagarde is going to be speaking at 10 a.m. 3 p.m. existing home sales, and FOMC Waller is to speak at 6 p.m. when everything, well, the European markets will have closed. Okay, let's have a look at the implied volatility. And as you can see, it's moved up from the low that we had at 1467 earlier on in the week, sitting around 1663, I think. Let me just put the one on here so that we can see, and then we'll know where we are for the rest. 1645, so just under what I thought it was. So yeah, 1645, we've moved up because the market moved lower yesterday, but again, it's coming off these lows and the market's starting to correct there as well, which we've seen for the last couple of days. In the 6-month chart, again, you can see this as the market is coming off those lows as the market corrects, and the same for the 12-month as well. As we said before, we're in that area where we could see a correction in the stock markets, which we have done in my absence, particularly yesterday, the market moving sharply to the downside. So let's take a look at that, have a look at the Dow, see what it did during yesterday, the DAX, the S&P and also the FTSE 100. And in the Dow, you can see for the last 2 days that I've been missing the markets move sharply lower, coming off the 78%, having been overbought, and trading down towards the 62.78 from the low over here. Projected back to these areas, so we're in an area where the market could find support. However, we're not quite oversold yet, so watch the 62.78 area there. 30-minute chart for yesterday. Most of the heavy selling was done in the pre-market. As soon as the cash market opened, they brought the market back, nice retracement there, and then moved back up to the low, and that's going to be the challenge now, is closing back above the previous day's lows for the stock market, is to try and maintain that longer term trend that we've got to the upside. So you want to see the market start making those rising lows to have any chance of moving back to the upside there. Overnight, the market's sitting just below the DP. We're in a very tight coiled range there for the Dow, and that's not too dissimilar for the others as well. So let's have a look at the DAX. DAX still very, very strong despite the hawkish rhetoric from the ECB, and again Lagarde speaking later today. Market down yesterday. Let's see what sort of retracement we've got. This is the first point here where we've got potential for a retracement on the downside. The market coming back to 38% yesterday, and you can see already trying to move back to the upside. Which is of no surprise really. What you've got to do is watch that 78.89 on the upside if the market does react and move back to the upside. If not, a close below the 38 in yesterday's low. If we look at that in the 30-minute chart, yesterday's low is here, as can be seen in this 30-minute chart. And what's fascinating about this is the market moved strongly to the downside yesterday, traded to the S3. The S3 is a 90% plus area where the market is likely to find support, and look what happened. We see the buying coming in there. We get the small corrective move back to the S3, and then the market moving up, and then overnight we've got the market sitting at the DP coiled, the same as the Dow. Except at the moment it's starting to spike to the upside. It's got to take out the 50 EMA in the 30-minute chart. In the 5-minute chart, there's your quick spike up there. It's only 6:30 in the morning and they're already starting to move the market back to the upside. But yesterday, you can see there that the market kicked off in the futures, traded sideways, came up in the cash to the previous day's close, and then struggled with the low, which can be seen there. And then as soon as we closed below the low and we switched to red, the market then continued with the odd pullback all the way down to that S3. And in the 5-minute chart, you can see the buying there, big spike in the buying. This coming in at 13.35 after some economic news then, and bringing the market back. And then overnight, as we've just seen, the market managing to rally back above the 200 MA, which is just down here. Let's just close these up a bit. You can see there the market getting through the 200 MA, sat sideways, and now it's broken through the DP, which turns it into a bullish move on the upside. Let's go back to the 30-minute chart, and you'll see that we've got, like I say, that 50 EMA. We've got an area of selling here where it started to become aggressive, which the market will be aware of. The R1 ties in with the 200 MA and then the higher, but once you get the momentum building, you can soon rally through these areas. However, in case that doesn't turn up and we see some selling coming in the futures, these are some downside targets all the way down to yesterday's low, which will be very important because, as I've just shown you in the 5-minute and in this one, this is where the buying came in. And just to recap this in the 5-minute, this is why yesterday's low is going to be very, very important for this market. There's also one thing that is really important in this as well, and that is, if I just bring this over here, you'll see why the market's bouncing here, because we're at the 15,000 level. They don't want it to drop below this. You'll see how it's hugged this psychological level all night and then managed to break through it, and now it's starting to make progress to the upside there. In the S&P, pullback of 50% from the low to high, recent low to high. Market sitting at the 20-bar moving average as well, where the market's bounced off. Got to get above the 50 EMA. We've got demand as well for the S&P. 30-minute chart, bit of a choppy one during yesterday. Again, you've got the decline in the pre-market of the official S&P and Dow. Market rallying back up to the 50 and the previous day's low. Then selling back off, but at the moment sitting above the DP level, just needs to get above the 50 EMA. In the FTSE 100, bit of a pullback, but nothing to be too concerned about because it's already looking set to move back to the upside today. The 89 is going to be the important area should the market move back. And the failure to do so, again, it's always good to look at the downside areas as well. We've already come back, as you can see, if I just drag these over. We came back to 62.78 in the pullback so far. Again, an area where you're likely to see some sort of support, and you've got the demand coming in, and now they're going to try and move the market back to the upside. 30-minute FTSE, sell-off yesterday morning, down to S2, buying coming in, ties in with the S3 in the German DAX where we saw the buying. Market back up, pull back, and then back to the 50 EMA where the market held as a resistance. However, overnight the market has taken this out and it's already heading back to yesterday's high. No surprise there, very strong at the moment. In the currencies, GBP, JPY, the market did that 89% retracement the other day. It has rallied back and done a double top there, and is trying to make its way back at the moment. 30-minute chart yesterday, you can see how important this has been. Bit of a pause at lunchtime and then continued throughout overnight on the Asian market and way through yesterday's high as well there. So let's just go back to the daily chart. You can see that through yesterday's high, which is also the 20-bar moving average. I'm going to get through a major resistance area, do it overnight when no one's looking, and that's what you can see there. Meanwhile, in the pound, continuing to move back to the upside as well. We can see there that we've more or less double topped. It's certainly in the realms of an 89% retracement as the market becomes overbought. Yeah, we're through it. It's a double top more or less, as can be seen there. Still above the 5-bar moving average, but we're certainly overbought, needing a bit of a breather. Yesterday, choppy and sideways, but then the market breaking out to the upside when the US dollar opened, and then overnight the market trading down to the DP 50 EMA, where we're seeing a bit of a bounce off this at the moment. In the US dollar, over the last few days, the market sort of sideways, which can be seen there. Let me just widen this out a bit. There you can see that we're just sideways. Some interesting volume there, but the dollar index stuck in a sideways range at the moment. Not a lot to report there. Waiting for the Fed on the 1st of February, I suspect, to see whether rates are going to be increased. Well, they are, but it depends by what percentage. Of course, quarter of a basis points will move the stock markets higher. Anything above that will see the market struggle a bit. And finally, let's have a quick look at the metals. Silver remains in a sideways range. It's clearly defined now in the daily chart there. You can see prices trying to move back to the upside. And if you wanted to, you could just draw in the retracements there. Watch the 78.89 heading towards 62 at the moment. Yesterday, sideways, then the news at 1:30. And the market moving up to the 200 MA, getting through this overnight, only to be slammed back through, but now through yesterday's high. And gold also continuing to move to the upside strongly yesterday. And in the 30-minute chart, again, you can see following the news and the ECB statement, the market moving up, but not above yesterday's high, unlike silver at the moment, which means that silver is showing a bit more strength than gold, as can be seen by the gold-silver ratio there as it starts to move to the downside a bit, having traded back up to 82. Wow. Some interesting things going on there. Missed a couple of good days by the looks of things, but back in the saddle now, and where I shall remain for the time being. So, let's see what the market does today, and whether the weakness continues or the market attempts to move back to the upside. Only time will tell, and that's over trade what you see. And thanks for watching. See you in the next one.